Hey guys, this is Chris Mincola with Mincola Group over at West USA Realty, and I'm going to be doing our quick market update. This will be super short for you. I'm going to share my screen and just show you what's going on here in a quick minute. We've got 64 days closed on market right now, 3.5 month supply. That's a balance, pretty close to balance anyway. 4 month supply would be a little bit closer to that balance range of 4 to 6 months. Absorption rate, kind of normal absorption rate, average at 28, a little over 28%. That means the home's being absorbed by the demand in the market. List price, 786 and some change. And our average sales price is at 535,000 and some change. Our list to sales price ratio, and again, this is across the board for the greater Phoenix area, of course, is at 97.61. Usually, we like to see that around 98, but that's not too far off. This time of year, kind of normal, through the holidays from Thanksgiving on, not anything weird there. There are a little bit less in properties going active right now. And there are quite a bit less in going under contract. Now, this time of year, again, you're going to see that. And this year is definitely lower than last year as far as properties going under contract. Overall, across the country, we're kind of seeing this right now. Of course, interest rates have had a big part of this, but we definitely know for a fact that there has been an uptick in people trying to get pre-approvals also at the same time. So I think we're going to see the seasonal thing like we always do, of course, after the holidays and into the spring and early summer, where we have people out there going after properties. We're also going to see that we're going to have an uptick with the overall rates from where we were, previously at 8%. So let's take a look at some of these other stats. Closings, days on market closed, those are actually down. Okay, so we see closings month to date, properties going under contract, all that's definitely down right now, again, this time of year, and the trend with the higher rates. But that's starting to become the new norm, right? Those higher rates. So we're going to see those things kind of loosen up a bit as rates continue to drop over the next year. I'm expecting to see a 5 in front of that next year, but we'll have to wait and see. Some of the other trends happening right now, we're seeing a slow but surely uptick in lower priced homes in the area under $500,000. I've been showing that over the last few weeks. We were at some point over the last year or two down, around 48, 47%. Now we're seeing that trend uptick a little bit. So there is overall, there might be a little bit more affordability, especially again, this time of year, builders are offering a lot of price incentives, rate incentives. So jump into those, ask questions, let us know if you have any questions on that. And then we'll see the highlighted portion here where properties over 500,000 and into $1 million. So guys, one other thing I wanted to share with you is the fact that we are in a balanced market according to the Cromford report here in the greater Phoenix area. Our market index, from 90 to 110 is the balanced range for the Cromford market index. They're the local gurus that compile all the data. We're at 104 right now. So we're right within that 90 to 110 range in a balanced market. Below 90 is a buyer's market. Above 110 would be a seller's market. Supply is 65. That's about 35 points under where we want to see it as far as being balanced. As far as supply is concerned, balanced supply, as I mentioned earlier, with the days on market and the amount of homes for sale is right around today, right around almost close to 16,000, not quite there, a little over 15,000. Demand index is, again, 32 points below that 100 mark, right dead center. So if those two numbers of demand and supply were exactly the same, we'd be in total balanced market. And that's my quick report for the week. I'll be doing a longer report. Check that out on all our social media. And we'll talk to you guys next time.